traders, welcome to the TMT Stock Market Strategy video for Thursday, May 19th. We had our Fed minutes come out at 2 o'clock yesterday, and the Fed threw a curveball into the markets. Markets did not like the hawkish comments, pretty much stating that it is imminent that they will be raising rates at least a quarter of a point on the next meeting. Whether it be June, July, or December, rates are going up, and they will have to go up. They basically put themselves in a corner, and if they want any type of credibility, they're going to have to raise rates. Rightfully so. You have commodity inflation across the board. They do not want the dollar to rise, but unfortunately, there's nothing you can do about that for now, at least. And let's see what happens. So, what does that mean? What does that tell us? Well, it's a game changer for me anyway when I'm looking at the markets. At least right now, we still need a couple of days of price action to really determine what's going on. But like I mentioned to you before, earnings season is ending, and I will be looking for a market top in the next week or so. And today and tomorrow, we should get maybe a little bit of a bullish bias because we have monthly options expiration. Okay, and when that does happen, as we all know, a lot of these fund managers and money managers, they sell calls and puts, and they collect that premium. They do not want that premium to go up or down. They want it to expire worthless. So we do have a small bullish bias. I was looking for a local low going into next week, which was this week actually. News trumps the charts, guys. That's the bottom line. So we did get a low yesterday, which usually we kind of mark a low either like Thursday, Friday, or Monday following options monthly expiration, but obviously did not happen. We did push lower yet again. So I'm looking for a sideways to upward movement today, tomorrow, unless we really get some follow through from yesterday's sell-off yesterday. But it really wasn't a sell-off. We were only down. We were up on the day, but we ended up being down, but it really didn't move that much. And I'm going to show that to you on the charts. But what I'm really, really liking, and I've been mentioning this, pounding the table for weeks and weeks, is gold. I like the short gold. I like crude oil, like any type of commodity, especially gold and crude and stocks, gold stocks, crude stocks, especially the miners, the GDX, or any miners in that ETF. Take a look at that for a possible short. In the short term only, I do think gold will start to shine, and I believe has started a new leg up, okay? That's going to be for another video. Let's get right into the charts. All right, right here in front of you is the 5-minute spiders, and I like to show this to you guys. You can see we've had one move, right? We popped up a little bit. This was yesterday where we just kind of grinded higher, and then one big move down right at the opening. So we ended up being flat to slightly down, and then we kind of chopped around the rest of the day. And you can see the same thing, inside range of the 15-minute, and bam, one way, and we chopped around going sideways. So really, I'm not a big fan of trading Fed, just because the volatility is a little too crazy. That you just don't know which way direction the market's going to head it. So, but anyway, you could see that here. All right, now let's go right into. I want to show you a couple of indicators which you've seen before. This is the S&P with the ATR average true range standard. Okay, and you could see that every time we get a market when the ATR starts to rise, markets start to sell off, and rightfully so, guys. This is not a problem, a bigger picture. And again, not right now anyway. If the market does correct or pulls back, we'll see, and we'll evaluate if this is a full-fledged sell-off or what have you. At the moment, I'm looking for a market to pull back maybe 50-60%, right around the in 1900, 1875-ish area. Maybe take back 2/3 of this move, half of this move, at least half, and then go from there. But you could see that we're starting to move higher, okay? And that ATR, it will continue to rise, even if we still get a little minimal volatility. But when the volatility starts to expand, the average true range is going to start to move higher. You're going to see larger wicks like you'll see on the daily chart what I'm talking about. So I'm looking for a price movement down somewhere around that 50 or 61.8% Fibonacci retracement. Again, when we get to that point, I will put that in the charts for you guys, all right? Here's the VIX, and you can see now the VIX is, and I brought this closer because you could see the Bollinger Bands are tightening, right? There's going to be an explosive move no matter what. You could see that. And if you see this, what do we have? We have positive divergence, right, in our MACD and our stochastics. You can see we're moving higher. Why were we chopping around here? And we did make, let me just get rid of all of this, we made a higher low in price from here to here, and now we're at the upper end of the band, okay? I would like to see one more move down and then an explosive move back up, take out that 50, and then we'll see where we go from there. But be prepared. You'll see what I'm talking about. Price, volatility. It moves so fast when you have a risk-off environment, and I'm not saying that we have it at this second, but with the Fed changing its tone to hawkish, you have to be alert and be aware of things. All right, here is one of my favorites, the advanced decline with volume. And I've shown this here before. Here's the zero line. If you notice, look at what happened when we were all up in here, right? Stocks were above, the advanced decline with volume was above zero, okay? It was above zero pretty much most of this time, right? And then we had a breakdown. And then what happened? We rallied back up again. And as we rallied back up, right, look at what happened. We're still up, elevated, but look at what happened here. And let me get rid of that. You could see here that we were below the zero line. That's a big negative, and look what happened. We sold off pretty hard. Okay, now that we've rallied, right, and we took that overbought condition, now we rallied, and look what happened here. And now we're back above the zero, and we had a good rally. We had a real decent rally off the February lows. Now look what's happening. As they're trying to rally, we're below zero again. Breadth is terrible, okay? The breadth of the markets are horrible. And this is just one. I showed this to you many times on the Pro Trader Premier video. You guys have to take a look at it. Again, go to the website. It's an invaluable tool for trading. NIMO, the Clone Oscillator. Take a look at this. Here's another thing I wanted to show you. Right now, there's plenty of room to run to the downside. And you can see we're only negative 48. Okay, and if we chop around today, tomorrow, we'll probably go back up to the zero line. But this will be ready for an explosive move up and or down with plenty of room to run before we're overbought and or oversold. All right, now let's take a look at the dollar with the Fed throwing a curveball. You could see on that weekly chart, I want to show you the weekly. This just looks like to me a very big, large bullish falling wedge on a weekly chart, guys. This is very important now. You could see that we caught the bottom here of this line, okay, of the lower trend line. So there's plenty of room to run, even to the upper end of this trend line. And this is a big move for the dollar, okay? If we were to rally this, commodities would be so deflated, and that'll get a great buying opportunity for gold, okay? Like I mentioned, guys, don't chase. Gold will come in. And when it does come in, you're going to be able to pick it up much cheaper at a better price and comfortable for your size position or the position that you do take in gold, not 200 points higher, okay? So this is something that I'm glad a lot of you did not do. All right, there's that bullish falling wedge, 5 waves. So we had that 5 waves formation, which has been confirmed. And here's that 5 waves down, and now we're looking for a move up, which we got. We're above the 50. Logical. We do get a pullback, and then we move higher, making that higher low from this previous low, okay? So dollar moving higher, which is going to tell us that commodities will eventually start to break down. All right, the VIX, the VXX, you've seen this before again, 5 waves down. I think we get one more push into this area here. Now, this is the VXX, not the VIX. So it's a little different, but if you're going to trade anything, I like to trade the VXX. So a little push down into that lower end of that trend line of the wedge, and then a big explosive move up. All right, and I'm looking for a bigger move to the downside in the markets in the next week or so. All right, and I think the Fed has started its engines to start moving lower. And if rightfully so, you know, the Fed's always watching the markets. And you know what? I think it's healthy. I think it's corrective, and it needs to be done. All right, now here's the spiders, right? Here's that head and shoulders that, of course, we've identified. And it's sitting right on the neckline. Even if we chopped around today and tomorrow, I do think we crack. There's that 196 target for you guys, all right? So just keep that in mind on the spiders. Transports, nice bear flag into this neckline of this M formation, this M top formation. So a move below it will correct, will break that bear flag, initiate a trigger. And of course, this M formation has triggered already. You can see that here. So this is just a back test, which normally usually happens for that move lower for that target of 127.17, okay? And again, that's the transports, our leader, not looking so great. Here's a Russell deemed our secondary leader. And you can see, I mentioned this yesterday. I didn't put it on, that head and shoulders pattern. Neckline broke. You could see that. So our secondary leader starting to break down again like it has been for the last 2 years. Not a good sign, okay? So when you have the Fed stirring up the markets, remember, guys, the reason why the markets are up here because of free money and only free money. Now that the Fed is going to have to raise rates, and again, another quarter of a point's not going to do anything, really. But for the markets, for the sentiment of the markets, for the dynamics of the markets, they're going to say, oh, this is it, this is the end of free money. So I believe there'll be some scrambling of some positioning of the larger funds and institutions to unwind some of their bets that they made some good money on. So that's just my view, again, but we will see how the markets react in the next coming days. Okay, sideways consolidation, you can see that here. We did break the 50, but again, just sitting here, just right underneath it. If we do get a little bit of a rally, I would suspect that we move higher. Lastly is the Qs, and you can see the Qs here, guys. Really, again, we didn't go anywhere yesterday, although it felt like it. We just sold off from the highs to the break-even mark, and that's why I don't like trading the Fed day, because it's just too explosive. You don't know which direction it's going to happen. I let the markets digest for the night, for the overnight, and see where we go for Thursday and Friday. And again, I am looking for a sideways to slightly bullish, and then next week the true direction of what the Fed has done to these markets after yesterday's comments will really take in effect. Have a great day, everybody. We'll talk to you tomorrow. Take care.